But here's Harsha Upadhyay of Kotak Mutual Fund with his thoughts on the market. Harsha, good morning. Let's start with your views on the consumer space because the big one, HUL, reports today. What are your expectations given current valuations of how HUL and these stocks might perform?
FMCG has been a sector where we are underweight, and this stance we have been continuing for last couple of quarters. Our take on the sector is the valuations are not very inexpensive, so they're quite rich. At the same time, we are seeing some amount of slackness in volume growth and some pressure on margins, and that's the reason we believe that this sector could underperform going forward, and hence we hold underweight stance.
Hi Harsha, good morning. Welcome to the show. You're overweight on the auto space. Maruti was the big gainer last week. Hero's numbers were better than expected as well. If you had to put incremental money into this sector, which pocket would you choose?
We are not going to increase further weight in automobile sector. The reason being most of our portfolios are overweight on auto, and we are playing a rate sensitive theme there, and we believe that the volume growth that has been there in auto space, whether you take two-wheelers or four-wheelers, that's been quite sluggish for last 18 to 24 months, and we believe that that's unlikely to continue going forward. So there is going to be some cyclical uptake, and along with that, if interest rates are cut, then I think that will provide further fillip to the sector. Incrementally, we are not looking at increasing weight in this sector.
How are you approaching or receiving news flow from New Delhi now, Harsha? Because again, there seems to be turbulence in Parliament, functioning is getting stalled. Over the next few months, do you think the market should expect some positive triggers in terms of announcements, or should it keep its expectations low?
I think it's always wise to keep expectations low whenever it comes to political decisions. We believe that yes, there are a couple of sectors which are quite linked to government policies and their decisions, and those are the sectors where there could be some impact if decisions are not taken or decisions are taken. For example, oil and gas sector, where most of our portfolios have been either neutral or overweight, is one sector which is prone to political risk, but we believe that structurally that sector is looking good today. We have seen crude prices correcting. There has been some adjustment in terms of petroleum prices domestically. That's one pocket where we believe that things are structurally changing for the positive. Rest of the sectors we continue to be underweight.
What is your expectation from the Reserve Bank policy this Friday, and is there any outside chance in your mind of a 50 basis points cut?
Well, there is more space today than probably a few months back, because crude has corrected quite a bit, gold has corrected. So to that extent, I think the pressure on current account deficit is going to reduce going forward, and inflation numbers are also looking much better today. To that extent, yes, RBI has more space, but our expectation is of a 25 basis points cut, and if it is more than 25 basis points, or if the language is clearly dovish, I think market will take it very positively.
What have you made of this fairly vicious correction in IT names, large cap IT names over the last fortnight or so, Harsha? Do you think it's deserved, or is there an ownership issue where people are beginning to scale down their overweight positions?
I think what happened in the first quarter of calendar year is somewhat reversing this quarter. While in our portfolios we maintained the underweight position on IT, mainly because of the challenging business outlook and also issues in terms of their profitability. And we were hurt a little bit in the first quarter of this calendar year, but that seems to be correcting today. We continue to hold the underweight position. We believe that things are going to be patchy for this sector. Yes, there could be stock specific opportunities depending on the valuation, depending on the business outlook, but as a sector I think this is likely to continue to underperform.
The big theme last week in the broader markets was that deal that got fructified in the aviation space, Harsha. All of those stocks, at least two of them, rallied about 20% last week. Would you put any money in that space?
No, we have largely been out of this sector because of the balance sheet concerns and the stress that has been there in the industry. Yes, after this some things have changed in some of the companies. We'll take a relook at some of these names, but I don't think it's going to be one of the sectors where our entire focus is going to be.
We are halfway through this earnings season, Harsha. Now comes the tricky part, the next 10 or 12 days. Do you expect us to end on as poor a note as the Q3 earnings season ended?
As you rightly said, I think usually the second half of the earnings season is what is going to be more volatile. Well, let's keep our fingers crossed and see how it goes. Until now, I think there have been more positive surprises than negative ones. So to that extent, this earnings season has begun well and carried on well. The last 2 weeks will be critical. Nevertheless, I think for the next year, we believe there is going to be double-digit earnings growth, and hopefully that will come through.
Does the market give too much credence to the first forecast that the IMD makes of monsoon, and how would you react to what has come through so far?
No, I don't think anybody is looking that far today, and these weather forecasts keep changing very frequently. So I don't think anybody is focusing on those forecasts yet.
Harsha, I didn't get a chance to ask you about your view on the markets itself. Do you expect this pullback to continue, or do you expect the markets to get into a consolidation phase now?
As you know, it's very difficult to predict short-term movements in the market. We are working with an opinion that probably markets will move in line with earnings growth over the next 1 year. Yes, every now and then, depending on liquidity and sentiments, I think markets can make sharp moves. But over a period of 1 year, we don't expect these sharp moves are sustainable, whether it's upwards or downwards. Overall, I think we can expect double-digit returns from the market, more or less in line with earnings growth.
How are you approaching the private banks now, Harsha, after the recent rally? Do you think there is more valuation upside, or in the last 2 weeks, the 15% kind of upside more or less factors in the good news?
I agree. That space has really shot up in the last couple of weeks in expectations of a rate cut. And also the results have been quite good in that sector. The earnings growth have been very strong, and the non-performing assets issue has not been there largely in that particular pocket. We continue to be overweight on the sector, but as we move forward, if that segment of the market continues to move up, then maybe there is case for taking some profits off the table.
You're overweight on the telecom space as well, I understand. Bharti will be announcing its numbers this week. What's the expectation there and overall in the sector as well?
Overall for the sector, we are quite positive. We believe that we are seeing first signs of benefits of consolidation there. There seems to be pricing power which has returned to the industry. The competition intensity has lessened considerably. But the stock that you mentioned, it's difficult to take a call right now because it also has Africa operations where things are not as rosy as what we are seeing for Indian operations. But nevertheless, I think India telecom operations for everyone seem to be turning around, and we are quite positive on that.
Thanks, Harsha, for joining in with your views. Let's